Hi, let's talk about Ashford Hospitality Trust. It's a real estate investment trust, focuses on investing predominantly in upper upscale, full service hotels. There's good news and a bad news. The good news, based on simple Wall Street, is currently trading 80% below the site's estimated fair valuation. Also, revenue is forecasted to grow over 36% per year. But as usually, as I research those stocks, they are highly volatile, and currently this stock is highly volatile over the past 3 months. Shareholders have been substantially diluted in the past year, and yeah, this is actually very serious negative shareholder equity. Currently unprofitable and not forecasted even to become profitable over the next 3 years. But there was some of the shelf registration, debt financing, write-offs, proxy vote issue, earnings update that made stock, as you can see, market performance, 1 year return, minus 37%. And so it's pretty sad, not beating the industry, neither the market. 3 years return, minus 93%. 5 year return, almost the same, minus 91. So this is actually very good for the education purposes, that investing in maybe good stock based on fundamentals back then, and those who invested currently got minus 90%, minus 80%. So it's pretty sad. That's why I recommend not invest more than 1% of your portfolio, because if one stock falls, it's not so bad as whole portfolio with one stock falls. But of course it's not financial advice. And the valuation side, based on simple Wall Street, fair valuation should be around $24, and tip ranks and MarketWatch has downside. So currently tip rank showing that 4.5 would be exactly the willing price, and it means 20% downsize. In 12-month forecast, the best they can offer, it's $6, the analyst price target. And similar, we have this MarketWatch, so stock price target on average $3.75. So based on this view, simple Wall Street, I think they count very much of the fundamentals and financial results. But tip ranks and MarketWatch, I think they have some of the analyzed data, or maybe some of the movement in the top shareholders. So if many of them decreasing the stock from the portfolio, it's usually not meaning good. Depends on situation. Future growth is forecasted very goodly, like 52% annual earning growth. As you can see, the dynamic is pretty sad, because earnings are declining every quarter. So that's pretty sad, but they have forecasted to normalize within 3 years. And earnings per share growth is also forecasted to be normalized, but not even on the positive side. So it's not forecasted that they will become profitable within even 3 years. Past performance, so as I said, the dynamic is not looking so good. So they actually, last time they were profitable 5 years ago, 2015 and 2016, and they're currently unprofitable. Financial health side, this is actually a very serious situation. The dynamic is not looking so good. The debt to equity ratio is very high. It's not even calculatable because the negative shareholder equity, which of course equity is not covering the debt, and they do have a cash, but it's so little, 200 million, and the cash level is almost 4 billion, and the dynamic shows it's keep increasing. So be careful, guys. Balance sheet pretty much on the liabilities and equity side red. So even if they would sell, yeah, but it depends. Long-term and other assets, physical assets 3.4 billion, long-term assets, receivables 667 million. But anyway, in pretty difficult situation is the company. They are not paying dividends, but they actually cut. They had the dividends actually back in 2003 they started increasing. Then in the financial crisis they decreased to zero, and they opened it once again 2011, started to increasing, then pretty much the same, and then so this is actually once again good for the good education for those who would try to invest only, for example, in dividend stocks. There's you have example of how even dividend stocks can reduce or cut all the dividends that they're paying, and it could look like that any company, even a quality company that have been, for example, on one of the industries top 3, they are cutting as well. For example, AT&T, they cut it half. So those who invested in dividend stocks can hurt as well. That's why the diversification of investors like you and me, it's more likely to invest more than or have more than 10 stocks in portfolio. Insider trading volumes says that there is buying and also the selling. I think that looks like they're trading, but it looks pretty funny. So there's an individual and company, though mostly they're increasing this stock to their portfolio because the level of in long term, I think there is possibility. So currently they're loading up, and I show you this graph. So this is actually 6-month frame. Everything looking great. Anyway, one year frame looks like those who invested, for example, last year's June, currently minus 67%. 5-year frame, in any time you invested, you are on the negative side. And max, so here's the thing that pretty much historically they're currently on the bottom based on 2003, from data from 2003. There were actually some around 8 point. So I think those current levels are pretty much historical, but there is a potential, but it's pretty risky to me. But still, I think it could grow if they got some of the debt financing, and I think that's why they put the stocks out. So shares outstanding keep just increasing very fast, and total sales in millions are decreasing. That's not a good combination. Ownership breakdown. General public holding mostly So yeah, actually those companies with high level of depth, negative shareholder equity is mostly holding by general public. Institutions anyway 13%, insiders 2%, private companies less than 1. Top shareholders, yeah, they're actually increasing the stock to their portfolio, but I don't. Okay, we have here Vanguard Group who has increased 30% last reporting holding date, 31st March, and also on the BlackRock, but they decreased. Anyway, looking pretty risky, but I see mostly the individuals and companies are loading this up. And yeah, as you can see, it's pretty volatile. Midterm curve looking downgrading, but I think there could be new curve upcoming. And yeah, as we can see, the volumes are very high on past month. And yeah, investing.com sorry the stock for long-term investors as a strong sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.